everybody, and thank you for joining us and taking the time out of your busy schedule for a fairly brief webinar today. We're going to talk about a few things that what we're calling hot button issues. However, these are probably the three most important questions that I get when it comes to workers' compensation in today's day and age, especially in Florida for medical practices. So let's go ahead and get started. See a nice little cartoon there about all the little issues that can happen with employees, which Steve had found, and it's pretty comical. So these three hot button issues for medical practices with workers' comp that we're going to talk about are how is the premium calculated? Why does it seemingly change every year? Which is a very good question and one that we'll discuss briefly here. But there's a few reasons for it, and they're pretty logical when you know about the work comp system in Florida. The second one, why is an audit performed every year? This is the craw in everybody's side. It's probably the one area where we get the most kind of, for lack of better word, issues in terms of, the company trying to get paperwork and payroll documentation every year. And what you have to remember is that it's not the insurance company that's doing this. It's required by the state of Florida for workers' comp because it's a regulated form of insurance. In fact, the most regulated form of insurance, that you're only estimating the premium ahead of time. So we'll get into that a little bit. And then also, how can we save money if premiums are regulated? So let's start out with how is the premium calculated? And very simply, with regards to premiums, there's two bodies that are involved with this. One is the National Council on Compensation Insurance. We call them the NCCI. You probably see that acronym every now and then. And they're actually based right out of Boca Raton, Florida. This is a company that works with all states in terms of determining their rates for workers' compensation, at least the states that are, part of the workers' comp system with individual workers' comp carriers and independent carriers, et cetera. So the NCCI works with the Florida Department of Financial Services, which has the Florida Department of Insurance underneath it. And these two entities get together every year and they look at a number of factors to determine the rates for all businesses in Florida, whether you're in a medical practice or any type of business. They look at that and they get together. Sometimes it's more than once a year, depending on what is going on in the system, if there are court rulings, et cetera, which we've had recently. So the NCCI maintains all of the statistics on claims experience for employers, claims payments, et cetera, and they use these along with some other factors to determine actuarial sound rates. They're basically doing all the research gathering, and they get that together and then determine with the state what they feel is an actuarially sound rate for every classification or class code for employers in Florida. And in medical practices in general, your class code is 8832, which is physician/clerical, and there can be other various classifications within that for different things. If you've got drivers, if you've got salespeople, if you've got various other types of employees that don't fall under physician/clerical. So with that being said, let's see here, move down, there we go. So they review the claim payments for medical costs as well as lost time, which they then provide to the insurance, provided by the insurance carriers. So the carriers take their claims information and their cost information, and that gets sent into the NCCI, and that's part of the research and the documentation that they bring in to be able to gather and then review to go to the state and say, hey, here's what's going on. You either need a rate increase or a rate decrease. And so, they review all of these as well as the costs that are associated with it, because you've got the payments made to injured employees and also to healthcare providers. And then there's other costs that are out there involved as well, where you're paying for the claims investigations, you're paying for lawyers, the servicing of the claims. So those are fees and costs that go into the system as well in determining what actuarial sound rates are. So moving forward, with these rates changing, and sometimes it does seem like they change every year, and quite frankly, they have in Florida, actually have been for the good over the past 12, 13 years. We've seen rates coming down dramatically. However, that has changed a little bit. Over the past year, we had some big factors with the Supreme Court in Florida that overturned some tort reforms from 2003 and 2004. And as most of you may know by now, on December 1st of 2016, we had a 14.5% rate increase across the board for every employer in Florida. What's funny about that is now the NCCI is saying that because things are looked back a few years in terms of how they calculate claims and payments, they actually in 2016 and early 2017 have had fewer claim payments, and therefore they're now asking again for another rate decrease. We don't know how much that's going to be. The guess right now is between 6 or 8%. So that 14.5% rate increase last year is now looking like it's going to be a decrease this year. However, don't get your hopes up, because they fully expect in the next couple of years, because of the Supreme Court decisions, that the rates are going to increase because of costs to lawyers and to the injured workers. So, and we'll discuss that in a separate webinar as to why that is, but that's one of the reasons. So moving on, let's talk about the audits real quickly. Once again, this is, as I said earlier, the craw on everybody's side in terms of, getting a letter from the insurance company and saying every year, okay, we need your payroll, your 941s, and we need a form filled out for, to confirm what your payroll was for that year. So nobody likes to do it. I can't imagine why. It's it's one of those things where you've got enough to do, and now all of a sudden you've got to pull all this stuff together if you don't have a bookkeeper or an accountant to do it for you. But unfortunately, it's required every year, and the reason for that is because when you start out in a policy at the beginning of the year, you're estimating your payroll. You don't really know. Very few medical practices or businesses know what their exact payroll is going to be at the beginning of the year. And so when you get through that year, the audit is done to determine exactly what your payroll was. Now, this is a benefit to everybody, even though it's a pain in the neck to have to do it every year. It's a benefit because if you overestimated your payroll, or you lost employees, or something happened where your payroll is actually less than estimated, you're going to get a refund in your premium. So, that's the good thing about the work comp system is it's supposed to be an exact system and based upon really what your payroll is. There's only a couple of other minor factors that can change that, such as claims and various limits of liability and stuff. But the overriding factor is your payroll. And if you've estimated it too low at the beginning of the year, you're going to get a bill at the end of the year. If you've estimated it too high, you're going to get a refund check. And so that's why they do it. They're required to do it because of the regulations and because of that specific reason. But you are required to do it. And if you don't do it, the carrier can estimate your audit, and they're required to do that as well. So if they don't get a response from you for the audit with the necessary paperwork and documentation, they're going to estimate your audit based upon some factors like what your payroll was last year. Sometimes they add an increase of 3% or so, just for, it's part of what the state allows them to do if there's not a response to the audit. So you definitely want to do your audit and get it done, get it sent in, make sure it's followed up on so that you're determining what your actual payroll was and everything is the way it's supposed to be. Okay, depending on the size of your medical practice or employer, they can request either self-audit, which is what we see with most of our medical practices. However, some of our larger medical practices get an on-site audit where they actually hire a contracted auditor to come out to you. They'll contact you ahead of time, tell you what they need, and meet with you to go over the payroll documentation for that in-person audit or on-site audit. So it is allowed. What I would do is if you get a call from a contractor saying they work for your workers' comp carrier, check with your company or your agent to make sure that they are who they say they are. That's always the safest bet. And then they can confirm that, and then you can go through with the audit and make sure it gets done properly. And as I said earlier, in Florida, you only pay premium based upon your actual payroll. If the payroll was estimated to be higher, then actually you get a refund. If not, you get a bill. So it's pretty simple stuff, but it doesn't make it any easier for everybody, and I certainly understand that. So just giving you the reason why they do it, and it is logical. So anyway, moving on to the third and final area with workers' comp. Workers' comp in Florida is regulated, as I said earlier, by the state. And so based on your classification, you pay the same premium regardless of the insurance company. The insurance companies have to charge the same premium. They can't give you discounts because they want to give you a discount. It's not allowed in Florida. There are a few ways that you can save money, and I'm going to go over those right now. The first is the drug-free workplace credit. This is, you'll see when you get your renewals for your workers' comp, there'll be an application in there for drug-free workplace and an application for employee safety program. You should take advantage of these if they work out for your practice. Obviously, drug-free workplace, we don't see a lot of small practices with this because there's not a lot of employees, and the physicians usually have a very close-knit relationship with their employees. So it's not worth the effort for them to go through that. However, it can be any size practice from 1 employee up to 200 employees or more. So it's worth to get that additional credit. You sign it, you do an application. The only real requirement is that 2 requirements, that you have a drug-free workplace in your employee handbook, or a procedural, some type of procedure in place that every employee is aware of, and that it is consistent throughout your employees. Everyone knows about it. It's been given to everybody in writing, and it's consistent. That's the main requirement. And then the other one is you have to be certified. You have to be certified with a lab. Obviously, the drug testing labs out there. There's a small handful of them that are out there that most medical practices have agreements with in the first place, and you have to do that and recertify that every year to get the credit. So it's a pretty simple process. But the other one is the employee safety program, and everyone should be taking advantage of this. This basically it says that you can get an additional 2% credit on your premium if you have a safety program that meets OSHA requirements. Well, OSHA requirements are pretty simple for medical practices. They require you to have at least 1 safety meeting a year where you discuss the safety in the office with the employees. Now, as an agent, and an old claims person, I actually tell my clients to have more than 1 safety meeting a year. So you have to, try to do it at least a couple of times a year, but also you have to do it for any new hires. So anybody that's newly hired, when they're going through that process and you hire them, you've got to provide that same safety discussion with them that you do for all the other employees once or twice a year. So if you do that in your office, and you should be doing it, you fill out the 1-page application and you get the additional 2% credit from the insurance company. So that's the first way that you can save some money on premium. The other ones that we tell people about to look at are the officer, partner, manager exemptions. In non-construction business, such as medical practices, any officer, partner, or manager of an LLC can apply for exemption as long as they're listed on the corporate documents as such. They filed with Sunbiz, and you see I have the website there where all the corporate documents are found. And then you would go on to, in the second paragraph there, you'll see you go onto the Florida Department of Financial Services website, the workers' comp site, And once you're listed as an officer, partner, or manager, you apply a very simple, quick process for the exemption from coverage if you do not wish to be on the workers' comp policy. Now, only officers, partners, or managers can be exempt from coverage. Anybody that's an employee must be included on the policy, and they cannot be exempt. So this is another area. A lot of our medical practices, the physicians are the owners and the officers, et cetera. Some of them choose to be exempt. It's a personal decision. Workers' comp is the least expensive form of insurance, so we always recommend that you be on the policy because you're going to get benefits from day one for medical, and then after day 7 of missing time, you're going to get benefits as well. And they easily pay for themselves if you get hurt as an officer and miss some time, a substantial amount of time. So we recommend that, but it's another way that the medical practice can save money by not having the officers on the policy. And also, you'll see there in the last paragraph, the officer salaries are capped. If you want to be included on the policy as an officer, they cap your payroll at $132,000. And if you're not taking payroll, they will use a minimum of $44,000 if you want to be included on the policy. So that's how that works. And moving on, finishing up here, the easiest way to save money, other than the two things that I just mentioned, is to find a dividend program through your insurance company. And there are a handful of insurance companies that have dividend programs. We have probably the longest running and best dividend programs with our programs, our exclusive programs in Florida for medical practices that can provide up to 30% of a dividend every year, regardless of the size of your practice. Could be one physician with one employee, could be 25 physicians with 250 employees. And if you are a large practice, we can do your own dividend program where you can have, depending on the size of your premium, you can get up to a 50% dividend. I have a large client here in Florida that has a large premium, a very large medical practice. And we just literally last week handed them a dividend check for $124,000, which was about half of their premium for the year. So as you can see, they work and they're wonderful. So check with your agent or your insurance company, see if you can get in a dividend program. If you have any questions, you can always call us. You can call me or anybody in the office here, and we'll fill you in our dividend programs for medical practices because they are a wonderful thing. It's a way to really save the practice money and save on the work comp insurance. And there's a funny little cartoon about OSHA requirements there. Thank you, Steve, for throwing that in. And that's it for today. And, there's my contact information there. If anybody wishes to contact me, if you have questions, specific or general questions, I'm available at any time. Feel free to give me a call, whether it's about workers' comp or any professional liability insurance. And once again, I want to thank everybody for being a part of the webinar today. Really appreciate you taking the time, and thank you again.